may not remember this, but back in 2015, a whole cohort of businesses known as roll-ups, basically companies that exist to acquire other companies, saw their stocks get obliterated as people realized that the Fed would soon start to raise rates, make it more expensive for these guys to borrow money, and the entire group suddenly went out of style on the Wall Street fashion show. But now, at least one roll-up has begun to make a major comeback. I'm talking about Platform Specialty Products, symbol PAH, which was created 4 years ago as it's known as a special purpose acquisition company by our old friend Martin Franklin, the former CEO of Jarden. Remember, that was sold to Newell, but has since become a powerhouse in the specialty chemical space thanks to a series of takeovers. Just like the other roll-ups, this stock did get hurt in 2015, spent most of last year languishing in low single digits. But take a look at this thing lately. In the last 12 months, the stock has nearly doubled, including a mammoth 57% gain just since the election. Platform gets roughly half its sales from agriculture, and we know the whole ag complex has been rebounding lately, while the other half comes from various industrial and energy applications. Got to ask about that. Two areas that should benefit ultimately from Trump's administration stance to deregulation and boosting the economy. Now, the company reported a robust quarter yesterday morning. Platform delivered a 2-cent earnings beat off of an 18-cent basis, with higher than expected revenue up 29% year over year. Some really bullish commentary on the conference call, some great cash flow. So can the stock keep climbing? Let's check in with Rakesh Sachdev. He is the CEO of Platform Specialty Products. Learn more about the quarter and his company's prospects. Mr. Sachdev, welcome back to Mad Money. Good to see you, sir. How have you been?
Hi, Jim.
All right, have a
great.
seat.
Thank
Here
you.
we go. I got to ask you point blank. How much of this rally do you think is because you fundamentals have turned, and how much are people just saying, hey, this is the kind of stock I want to own in a Trump regime?
Well, you know, Platform is in two terrific businesses, and last year it was our time to execute, and I think we did a terrific job. We have a great team, and I think there's a long way to go for this company.
Okay, so the execution you regard as being getting the margins up, paying down debt, and also having a lot of organic growth.
Yeah, it's all of that. You know, we bought several companies, as you know, coming into 2016. We wanted to integrate these companies, which is what we have done successfully. And we have become very, very customer focused. We have been very focused on growth. And I think we're delivering results on the back of organic growth.
Now, let's take your business in the car. Are you displacing other companies that have been there, or you happen to buy companies that had good positions and you made them better?
Yeah, so, you know, as you said, we have two businesses. We have a business of specialty chemicals for the electronics and the automotive side. We are gaining share in Asia. We are becoming very big. And in the ag side, we are a very, very global business. It's been a terrific year for us. In an industry that has declined last year, we actually grew.
Well, we're confused about the ag cycle because we're friendly with AGCO, which has had a monster run. But candidly, it's all on the come. It really hasn't happened yet.
Yeah.
Do you think people are jumping the gun, or is there really a major cycle, especially in Latin America, and you got to be in on it?
Yeah, you know, the ag business overall has been in a slump in the last few years.
Terrible.
But our business, we are into specialty crops. And so we are into niche crops, high-value crops like fruits and vegetables that haven't been hit as hard. So we're not that much into row crops like
so you're not corn and soy where
we are some, like everybody is, but we are more in specialty crops, and that's really helped us.
Okay. We talk a lot to Ed Breen, who's really remarkable, and Andrew Livers. And they have really put together what's going to be, I hope, if the regulatory authorities let them through, Dow DuPont. And they're going to split the company up, and they think that ag should be separate from, well, especially chemicals. I know that you were asked on the conference call, and you said, listen, you're not going to comment on rumors or speculation, but let me just ask you, do you like the breakup of what Dow and DuPont are doing?
Well, you know, I think that makes a lot of sense for them. You know, there's a lot of consolidation going on in the ag industry. Frankly, you know, we work with a lot of these big companies in collaboration. We don't necessarily compete with them because we have a focus on niche markets and niche products.
All right. When we look around the world, I know that you're very big in Asia. We think Asia's making a major comeback. Now, you may be taking share in autos, and I get that. But we think that it's an unheralded comeback. You're all over the place. Are you seeing the kind of green shoots that we are seeing?
Absolutely. You know, for us, Asia is huge for our what we call our performance solutions business. That's our industrial business. We are big into automotive, and we are gaining share, but we're also entering into the automotive business. Platform is huge in Asia in industrial chemicals. We are big in Latin America in agricultural chemicals. So, that way we have exposure throughout the world.
The only segment that was down 20%, which really wasn't that bad compared to some others, was oil and gas. Now, I'm looking at oil and gas in the 50s, and I'm seeing the rig count goes up all the time in this country because we've got lower cost oil. But do you think that at 50, 55, it's just going to be a tough year?
Our oil and gas business, first of all, it's a small piece of our business.
Right. It doesn't move the needle.
And most of our business is in offshore drilling rigs, so it's in production.
Okay.
And we have, while the business is down 20%, our margins are still very good. And we think that even at $50, we're going to continue to make very healthy margins.
Okay, well, look, I mean, to me, this story sounds like it's going to continue. It is kind of in the sweet spot of what people are looking for right now. Okay, that's Rakesh Sachdev, CEO of Platform Specialty Products, PAH. Yes, it is a roll-up, but they're executing very well in two businesses, in ag and industrial, and both of them, I think, are going to be very strong in 2017. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.